Welcome back. So let's shift the focus now on the commodity markets. We have Manisha with us. Manisha, so what commodity do you have your eye on now?
Well, I'm looking at agriculture as a space, Surbi, because the weekend has been quite busy with the industry trying to sense the impact of the government notifications. And there was a barrage of that on Friday evening. The various Twitter messages from ministry officials suggest that these notifications that have come in for export and import rules are being done so that to ensure availability, especially ahead of the festival season, also support farmers going forward and to ensure that there is easy price and availability also as the new Kharif harvest starts coming into the market. Well, that will start happening from the third week of September. I'll take it one by one and I'll start with Basmati rice. Well, remember last year, $1,200 a ton of MEP was put in case of Basmati. That is when the government realized perhaps a lot of illegal other rice was also going as Basmati. That was cut to $950 per ton, and that has been completely done away with right now. The industry has been waiting on the non-Basmati rice. If there are any changes onto that one, that is still awaited. But at this point in time, good news for the Basmati exporter companies there. The one thing that continues to say is that APEDA will continue to monitor the export contracts of non-realistic prices therein. If you look at the overall exports as well in sense of Basmati, we have seen an year-on-year increase onto that. 5.9 billion in the previous year as compared to 4.8 billion is the reason the government had to take that action. And the next one is the pulses prices, where you have seen most of the pulses trade above MSP. Here as well, the yellow pea import that we usually do from Canada and Australia has been continued without duty. This was first started in December 2023. It was until March and then another quarter and another quarter. And the latest extension really comes in until December 2024. When it comes to pulses, well, India has seen higher prices. The last season wasn't so great. And when you look at the production consumption numbers, that will show you a deficit and the reason that we continue to see higher prices. So 27 million tons of consumption is what we have vis-a-vis 24.5 million tons of production that India sees. Edible oil clearly is a big sector, and this has been a long-standing demand from the industry to the government as well. In the last few days, we've seen government actually say that they will continue to buy soybean on the MSP in states like Maharashtra, MP and Karnataka. And this is the latest step now coming in from the government, where the edible oil duty has been hiked by 20% for the crude and refined oil as well. Now, with this change coming in, when you look at the crude oils, the duty hike, of course, has led to the hike in prices. But when you look at the final numbers there, the crude oils will attract a duty of around 27.5%. This was 5.5% earlier. And the refined edible oils will attract a duty of 35.75%. This was 13.75% earlier. Another notification came in from onion, where the minimum export price of onion has now been done away with, and the export duty cut from 40 to 20%. Wheat was another one. Remember earlier, the wheat stocks that were with retail, wholesale traders was at a very stringent low. That also has been eased off now, and this is ahead of the festival. So many of these retail companies, FMCG companies, wholesale processing companies can hold on to wheat. This is ahead of the festival season and ensuring that there is enough inventory and stock as well.
All right, Manisha, thank you very much for that. So that's commodities in focus.